today what we're going to talk about is the seller's affidavit of non-foreign status. It is the form that I have on the screen right now, and I'm going to talk about why we need it, the alternatives to it, and just try to make things a little bit easier for all of you when it comes to using this form, because I know sometimes when you're representing a buyer, it's very difficult to get the form. If you have questions, you're welcome to put them in that box that I just mentioned to you, and I will go through all the questions and answer them at the end. So thank you so much. Okay, so the seller's affidavit of non-foreign status is the form that I have up on my screen right now. Many of you probably recognize this form that we put into our real estate transactions. It's a CAR form, and we've used this form for a long time. But of course, it creates a lot of controversy because it asks the seller to provide their social security number, and most of the time the sellers don't want to do that because of identity theft and for reasons of confidentiality. So I'm going to switch over to my presentation, and we're going to talk about what are the withholding laws pertaining to a real estate transaction. So there are two laws that pertain to a real estate transaction. One is federal withholding, which is often referred to as FIRPTA, and the other one is California state withholding, which is called CalFIRPTA. Which law is important to real estate agents? The federal withholding or FIRPTA law. It's the Foreign Investment in Real Property Tax Act, and you can see on my screen here it says since January 1, 1985, the act has required that a buyer withhold 10% of the gross sales price and send it to the IRS if the seller is a foreign person. The term foreign person has a very specific meaning, and it can be misleading. There are a number of exemptions and special rules. So the one thing to remember when we're dealing with all of this is that, of course, the people that write these laws, like the IRS, they're not people who deal in real estate transactions. So sometimes the expectations, like making a buyer responsible for withholding, is something that's very difficult, and that's why as agents we have to get involved and make sure that we're properly documenting our files for the best protection of the buyer. Who is not a foreign person? So we know that if the seller is a foreign person, 10% has to be withheld. 10% of the sales price has to be withheld at close of escrow. So the question is, who is not a foreign person? Anyone who is a U.S. citizen or has a resident alien, or also known as green card, that is currently valid. Those are people that are not foreign persons. Anyone that doesn't fit into those guidelines would be considered a foreign person and would generally have to have the 10% withheld. Did you know that your buyer is liable for the withholding? I think this is the thing that I wanted to convey to everyone the most in doing this webinar, because I think that most of our buyer's agents, when you're turning in your files at closing and we're asking for a seller's affidavit or a equal form, you feel like, why do I need to have this? I represent the buyer. But the reason you need to have the form is because the buyer is actually held liable by the IRS if withholding was required and it didn't happen. What is the potential liability of the buyer for failure to withhold when required? So you can see right here on the screen, it says the IRS can assess the full 10% of the sales price that should have been withheld, or the actual tax liability, whichever is less, plus interest and penalties against the buyer. So you can imagine, depending on the sales price of the property, 10% of the sales price is a lot of money. So it's not anything small that can be assessed in liability to the buyer if the withholding doesn't happen. It says this can occur if the buyer does not obtain the seller's affidavit of non-foreign status and the seller fails to pay taxes due on the sale. Even if the seller eventually pays the taxes, the buyer can still be held liable for interest and penalties. So making sure that we protect the buyer is really important in these transactions. How can agents help protect the buyer from liability? The IRS said that in order for the buyer to be exempt from withholding, the seller would need to provide to the buyer an affidavit from the seller stating, and it has the words under penalty of perjury, that their United States taxpayer ID number, they have to write it out, and they are not a foreign person. And the way that we've generally met that requirement is with that seller's affidavit form that we talked about. So I'm going to switch back to that really quick. So in the seller's affidavit form, they state their name, phone number, address, social security number, and then here under number 4, they give the exemption that says, I am not a non-resident alien. I know that statement is confusing because it's a double negative, but basically they're saying, I am either a U.S. citizen or I have a resident alien card. And that's what they use this affidavit for. And you'll notice when I go down here to the bottom that at the end where the seller signs, that there's a portion where it says that they're signing under penalty of perjury. In the last sentence there, it says, under penalty of perjury, they're signing the information. Okay? So that is how we normally would satisfy the IRS requirements for withholding. Coming back to our presentation here. And of course, there's the form that we just went over. I put a bigger version on the screen for you a minute ago. Is it necessary for a seller to sign a non-foreign affidavit if the seller tells the agent they are not a foreign person? So let's say someone sends an email to you and says, my seller's not a non-foreign or is not a foreign person. Or let's say the escrow company sends you an email and says, you don't have to worry, the seller is exempt. Is that sufficient? The answer is, it is not sufficient for someone to verbally tell you that they're exempt. If the buyer wants protection from personal liability, they have to have the seller complete an affidavit of non-foreign status, or there is an alternate form, and that's what we're going to talk about. But on the general outside of the law, the seller has to complete and sign an affidavit providing the Social Security number, saying under penalty of perjury that they are not a non-foreign person. But because of identity theft, they've gone ahead and added some other things. So the next question, can the seller give the seller's affidavit including their Social Security number to escrow only and not to the buyer? So how could the seller protect themselves from identity theft? Could they give this information to the escrow company and not give it to the buyer? And the answer is yes, they can do that. So there was a housing and economic recovery section that said the seller may give their affidavit with their Social Security number to a qualified substitute. However, the qualified substitute must furnish a statement to the buyer stating under penalty of perjury, and you must have those words on that written statement, that they have the affidavit in their possession. So a qualified substitute in the case of California real estate is the escrow company. So if the seller does not want to sign a seller's affidavit and provide the Social Security number, it's not enough just to sign the form, they have to give the social. If they don't want to do that, they can give the information to escrow, but then you still need escrow to give you a letter signed under penalty of perjury saying they have all of that information in their possession. And this is the form that CAR has created for us to use for this very purpose. It's called the Qualified Substitute Form. It's Form QS in zip forms. And the escrow company could take this form, fill it out, and sign it, and it would absolutely meet the IRS requirements to satisfy the seller's affidavit guidelines. So rather than get the seller's affidavit, we could get this QS form signed by escrow. However, many of you have probably experienced escrow companies who say, I'm not going to sign this form because it's a real estate form. I don't know why they take that position, because if they read the form thoroughly and they read the law, they would know that this is exactly what IRS is asking for, but there are companies that will refuse to sign this. If that's the case, they don't have to sign a CAR form. The escrow company could actually just give you a letter that they create on their own letterhead, as long as it says, under penalty of perjury, we have the exemption and the Social Security number on file, you would meet the requirements of